You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borg. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon, welcome back. Today is Tuesday, 4th day of February, 2025. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. We do 2 live broadcasts every trading day. The first live broadcast is our live training room. That's reserved for members only and those who are taking their 1-week free trial. If you haven't taken your 1-week free trial, when Michael joins us in a bit, he'll walk you through step by step how to take the trial. We'll get your indicators up and running today, and your trial will officially begin tomorrow. You will get 5 consecutive trading days, no credit card required. Now, when the live training room ends each day at 11:30 a.m. Eastern, we take a 30-minute break and come back for this broadcast, the afternoon broadcast, which is open to the public. Everybody, everywhere on planet Earth with an internet-connected device. There's 2 different ways you can join the afternoon broadcast live. The best way, you only have to do it once. Go to mytradingiq.com. Scroll down to where it says Noon Broadcast. Click the link, fill out the 30-second registration form, and you're done. What will happen going forward is every trading day, you get an email about an hour before the broadcast starts. In the email, there's a link, so at 12 noon Eastern, all you have to do is click the link in the email. It will automatically log you into the platform. Now, the benefit of doing it that way is you have access to the question box, so you can ask questions and participate in the discussion. Of course, there will be days you're out of the office, away from the desktop, but still want to join live. And there'll be days when you're busy, can't join live, but want to catch up later. You can do both of those via our YouTube channel, which is easy to remember. youtube.com/CFRN. Not only do we broadcast live every trading day at this time on our YouTube channel, but we also archive each and every daily broadcast. Currently, there's over 2,700 daily episodes archived for your educational and viewing pleasure. youtube.com/CFRN. It's also a great way to get to know who we really are. Thanks to the power of YouTube, you can scroll back 6 days, 6 weeks, 6 months, 6 years, even more. Obviously, you're not going to watch them all, but you can see how we've evolved over the years to whatever degree you want. You know, click a year here, click a year there. You get the idea. All right, our afternoon broadcast schedule is right here, so we're going to just dive right into our daily devotional. The topic we're on right now is learning to pray the Jesus way. This is day 2 of 5. And our scripture today is Luke 11, verses 2 through 4. Now, this is from the Message translation. So, it's not going to sound the way you've always heard it. It's a familiar scripture, but it puts it in plain English. Beginning in verse 2. So he said, when you pray, say, Father, reveal who you are. Set the world right. Keep us alive with 3 square meals. Keep us forgiven with you and forgiving others. Keep us safe from ourselves and the enemy. Luke 11, verses 2 through 4. So, learning to pray pivotally. In science, we learn of a pivot point called the fulcrum, on which something is placed. It will move it with ease. Think of a seesaw or a door on hinges. These everyday objects move smoothly and easily because of their pivot. A pivot creates a turnaround with little force. A pivotal prayer does the same thing. It's the sort of prayer that shifts the spiritual atmosphere and brings God's will squarely into focus. It's the sort of prayer that is God-honoring and kingdom-benefiting. When the disciples asked Jesus to teach them how to pray, he responded by teaching them the well-known Lord's Prayer. This prayer is short and sweet, yet it is all-encompassing. That's what a pivotal prayer looks like. Tim Elmore defines pivotal praying as learning to pray at higher levels. He also says that these prayers are mission-driven, not maintenance-driven. When we analyze the Lord's Prayer, you'll see a pivotal prayer hidden in plain sight. It begins with addressing God the Father and honoring his name. It continues with Jesus asking for the kingdom of God to come on earth, to provide everything needed for that day, and then for forgiveness for the one praying. It doesn't stop there, but ensures that forgiveness received becomes forgiveness shown, in case we forget about that, and then closes with a request for protection from evil. A prayer like this changes the equation from us to the kingdom of God. It's not wrong to pray for ourselves. In fact, it's imperative that we do. What if instead we prayed for ourselves with an eternal perspective? What if our prayers are about asking God for his kingdom to invade our lives so that many more find salvation in Jesus' name? This may just revolutionize our lives and make us mighty channels for God's work in our world. Let's pray. Heavenly Father, hallowed be your name. May your kingdom come and your will be done in our lives. Provide for our daily needs and forgive us as we forgive others. Lead us away from temptation and deliver us from all evil. Teach us to trust in you completely and to walk in your grace each day. It's in Jesus' name we believe and pray, and everybody said, amen. Amen, and happy Tuesday. Let me give you the numbers from around the world. We'll start here in the U.S. with the cash markets, or the indices as they're called. Currently, the Dow is up 103 points. The Nasdaq's up 227, almost 1.25%. S&P 500 up 40. The Russell 2000 up 22, just shy of 1%. In the commodity basket, crude oil down 17 cents, trading 72.99 last. Gold up $12.30, trading 28.69 half last. Silver up 48 cents, trading 33.01 last. That's a gain of 1.5%, almost $2,500 per contract traded. In the Asian markets at the close, the Nikkei posted a gain of 278 points. Shanghai got a problem with that data feed. Hang Seng up 572 points. That's almost 3%. And in the European markets at the close, FTSE down 12, DAX up 82, the CAC up 51. So, that gave us a green day in Asia, a mixed day for the UK, and so far, it's a green Radio Tuesday here in the US of A. I'm sure you've heard the term Turnaround Tuesday. Well, I guess today would fit the bill. Although much was that huge gap open Sunday night, much of it was recovered yesterday across most markets. So let's take a peek at the news. Secretary of State Marco Rubio was named acting director for the U.S. Agency for International Development yesterday, stepping in as the organization faced increasing calls for its closure by the Elon Musk-led Department of Government Efficiency. The roughly $40 billion per year agency oversees the vast majority of U.S. foreign aid, funding efforts ranging from economic development to humanitarian assistance. The organization, authorized and funded by Congress each year, was created in 1961 by President John F. Kennedy as a means to consolidate foreign aid under one roof. As of yesterday afternoon, reports suggested USAID or USAID would be folded into the State Department with an unspecified reduction in workforce while retaining its humanitarian mission. Now, America has always been known as the most generous nation on planet Earth. Some may not want to admit it, but the numbers speak for themselves. And I believe when John Kennedy created this, President Kennedy, clothe the naked, feed the hungry, house the unhoused, kind of thing, right? So, as they're reading through this laundry list of stuff that our taxpayer dollars are being spent on, I'm talking large chunks of money. It's mind-blowing. They just went on and on and on and on. And the one that sticks out in my mind, although there were many others just as ludicrous, was we spent a ton of taxpayer dollars to create transgender comic books. Not in America. I mean, even that I would take issue with. But in Peru. Really? Now, we're really This whole business right here is really starting to drain the swamp. And, well, the other party's not too happy about it. Analysts say the move could face legal obstacles, while USAID has reporting and budgetary ties to the State Department. It was established by Congress and therefore may require an act of Congress to dissolve. The move follows a weekend standoff between Musk aides and agency personnel who claimed Doge staff did not have appropriate clearance to access classified documents. Yeah, okay. I mean it. You should Google it. Or go to their website. It's USAID. And I suspect somewhere on their own website. Maybe not, you know. Perhaps Google, what did USAID spend money on last year? And you can read the whole list. If you haven't heard it already, I'm sure you probably have if you watch the news. It will blow your mind. President Trump's 25% tariffs on goods imported from Mexico and Canada are now paused for at least 30 days after the commander-in-chief struck last-minute border security deals with both countries. The tariffs initially set to take effect today would have ignited a North American trade war with consequences potentially passed on to consumers. But Mexican President and the Canadian Prime Minister agreed to send approximately 10,000 troops each to their respective borders with the U.S. as part of efforts to curb the flow of illicit drugs and illegal immigration. Trudeau also said he would carry out a previously announced $1.3 billion border plan, appoint a fentanyl czar, and launch a joint strike force to tackle organized crime, fentanyl tracking, and money laundering. Negotiations between the U.S. and its neighbors are expected to continue. A 10% tariff on Chinese imports will take effect today. Mexico, Canada, and China accounted for 42% of total U.S. imports last year, or roughly $1 trillion in goods. And the hectic kickoff to Donald Trump's tariffs in recent days, making one thing abundantly clear. This is very different from Trump 1.0. On an array of issues, from the speed of the duties and the wider array of consumer staples caught in the middle, to Trump's plans to use tariffs for getting everything else you want, the president is offering a new and unpredictable approach. After announcing historic duties on America's top 3 trading parties over the weekend, Trump then shocked markets again yesterday with a quick pivot on 2 of them. As of this morning, 10% duties on China are in place, and the world's second largest economy has already hit back. The 25% duties on Canada and Mexico are on hold for a month as talks continue. Meanwhile, the rest of the world is approaching the issue differently. In just one example, China threatened today to use probes into Google and Nvidia as leverage in the coming face-off. At a Politico event this morning, Trump's senior counselor for trade and manufacturing, Peter Navarro, said the president's call with Chinese leader Xi Jinping will take place today and that a tariff pause will be on the table. The unpredictable mix is clearly flummoxing Wall Street and the rest of corporate America. It is fundamentally different, according to former U.S. Trade Representative General Counsel Greta Peach. She said in an interview that Trump is now breaking new ground in what is a trade authority. What are they used for, and how expensive the transactions will be? Trump is approaching the tariff issue this time around at a different speed and promising duties at higher levels. The current blanket tariffs first approach in evidence this week was absent from his initial or first presidency, Trump 1.0. Trump invoked a 1977 law allowing a president to declare an emergency and act immediately as he enacted duties this week. Trump used different and much more gradual authority last time. He also started talks with China and signed tariff-related executive orders in the early months of 2017, but then held off on key new duties for an entire year. So this is really important. This is a new Trump. He was not a career politician the first time around. Maybe there were some things on Washington, D.C. that he didn't fully understand how things work. This time it's different because he understands, and he's taking action. He's not taking any prisoners. Job openings declined more than analysts expected in December, hitting their lowest level since September as investors continue to watch closely for any signs of cooling in the labor market. New data from the Bureau of Labor Statistics released Tuesday showed 7.6 million jobs were open at the end of December, a decrease from the 8.15 million in November. This marked the largest sequential drop in openings since October of 2023. Now, the November figure was revised higher from 8.01 million open jobs initially reported. Economists surveyed by Bloomberg had expected Tuesday's report to show 8 million openings in November. You can view this one of two different ways. Suddenly everybody's got a job, or companies have been forced to stop hiring. Two very different sides of the coin. As Michael said this morning in the live training room, you can look at it as the glass being half full or half empty. Fox is about to enter the competitive streaming marketplace with its own direct-to-consumer service expected to launch by the end of the year. Fox CEO Lachlan Murdoch made the announcement during the company's fourth quarter earnings call Tuesday, saying that while the traditional cable bundle still presents the most value for both Fox customers and its business, we do want to reach consumers wherever they are. And the stock's up almost 5% on the day. Analysts have said Fox assets have been heavily skewed toward the linear pay TV ecosystem at a time when more consumers are cutting the cable cord in favor of less expensive streaming services. To that point, Murdoch said the new service will target the cord cutters and the cord nevers. The company plans to release more details regarding the launch in the coming months. PayPal taking a tumble. Shares of PayPal slumped today as the payment platform's adjusted earnings missed estimates for the final quarter of 2024. The owner of its namesake platform and others such as Venmo reported just over $8 billion in revenue for the fourth quarter, up 4% from the same time last year, and better than the $8.26 billion analysts had expected, per estimates compiled by Visible Alpha. I'm sure PayPal will get through it. Although they are down 10% on the day. It's a lot for an individual stock. Meta Platforms, on the other hand, their shares are on track to post a gain for a 12th consecutive session, their longest winning streak ever, as investors cheer the social media giant's artificial intelligence strategy. At the time of this article, the stock was up 1.1%. What's it up now? It's 1%. If the gains hold through end of this session, the owner of Facebook will have added more than $235 billion in market value during the streak, bringing its market capitalization to nearly $1.8 trillion. Wow. Big numbers. Guys, I apologize. I've got somebody at my door. Hang on a second. I'll be right back. Sorry about that. All right, let's take a look at the local news. Logic 247. That's our 24/7 around-the-clock E-mini alert service. Not just E-minis, but crude, gold, silver. We're in week 340 since we launched Logic 247. Over those 340 weeks, we have issued over 18,900 individual handcrafted alerts. And we've averaged on a weekly basis 20% or less of the alerts being stopped out based on market structure and a simple process we teach all of our passport holders in their one-on-one mentoring sessions. Valerie did the recap this morning at 6:30 a.m. Eastern, so some things have changed since then. Been a couple additional alerts, but at the time she did the recap for the week, we had a total of 12 alerts, still waiting on the outcome of 7. It gave us 5 actionable alerts, of which so far nothing has been stopped out. Last week I think we ended up with 17%. But the weekly average over 340 weeks is 20% or less. Now the purpose of the logic alerts, while yes you can trade them, they're really intended to help you learn how to read the chart, how to spot potential resistance, how to spot potential support, and how to find the windows of opportunity in between. If you use them properly over time, it will teach you how to read the chart. You'll be able to look at any chart, any time frame, any market, and with our humble set of indicators, instinctively know what the next high probability move is. Each logic alert has an entry price, an initial target, additional targets, and a final trade to target. So again, yes, you can trade them, but make sure you use them to learn to read the chart. If you want to learn to trade for a living, it's obviously important that you got to learn how to read the chart. Now the logic alerts can come out anytime around the clock. Futures trade around the clock. We have traders around the globe. Our day session is their night session, and vice versa. Our original alert service, which is much older than the logic alerts, concierge trade alerts, don't come out around the clock. They're published as a static report shortly after the Globex Open each evening, and on the evenings I can 5 minutes before the open, which I did last night. So 5 minutes before the open last night at 6 p.m. Eastern, all members and trial members had every one of these targets. Okay? Silver, gold, the NASDAQ, crude, the Russell, the Dow, and the ES. 5 minutes before the market open. So let's go look at the daily chart. As we do. And here it is. Now as you can see, we opened here and we traveled all the way down here. Once again, back to, oh, we didn't quite make it to the 24% Fib retracement this time. And buyers came in, drove us back up. Right now, we're sitting right on top of the BBC. Now, the Fib extensions have lost their relevance. I'm going to redo them. But for now, I'm just going to remove them. Okay? And the new ones will probably look something like from here to here to here. But you'll see it tomorrow. Now, the daily chart's important because institutional traders, the ones who actually move price, they look at daily, weekly, and monthly charts the way you and I look at 30-minute charts, 5-minute charts, tick charts, and range charts. Has everything to do with account size. They have accounts in the hundreds of millions, billions, even trillions of dollars. So they can stay in a profitable position far longer than you and I are comfortable with. And they can endure a drawdown far deeper than you or I can. So by spending 2 minutes with whatever you trade, futures, stocks, crypto, Forex, ETFs, whatever it is, okay, you're getting a free look over the shoulder of the deep pockets that move price, and you're able to identify things that you can't see on your smaller time frames, like the fact that we have red and falling overhead. And we've already punched through the BBC twice and pulled back. This is today's candle. This is Monday. That was the gap lower open. Okay. So let's go to the 30-minute chart. That's where all the alerts are created, both the logic and the concierge. The vertical lines separate today, Tuesday, from Monday. Back over here is Friday. These are this week's weekly trading zones. The zones come out Monday morning at 6:15 a.m. Eastern for the last 15 years. When price rallies up to a weekly zone, we expect resistance. When it drops, 20% of the time, rejection. See how price came all the way down to the zone and then bounced off of it? That's rejection. And 10% of the time, the slice. That's when a 30-minute candle slices through a zone like it's not even there. When it does and runs out of steam, it will typically retrace back to the zone it sliced through and continue in the direction of the slice. See a leg, a retracement, leg. See how the market kept finding support here at the zone, resistance at the zone. And then last evening when the market opened, this is the opening candle, we gapped higher on the open, but immediately fell, got below the weekly zone after we consolidated there. We got to the BBC, consolidated for a couple hours with red and falling overhead. That took us below the BBC, took us down to this target. We spiked the target, or the zone, all the way down to the target, which is based off this bullish cross. When you have a bullish cross that leads to an extended move, the first time price revisits that area will almost always be good support. And it was. Support will send the market looking for resistance. Resistance sends us back to support. Support sends us looking for resistance. So right here, at this bearish cross, see on the bullish cross we found support. This bearish cross, when we pulled back into that area, we found resistance. Does that happen 100% of the time? No, but it happens more often than it doesn't. So we get a pull back to the VVC. The pullback holds more often than not. Whether you're pulling up from below or pulling down from above. Right here we create another bullish cross. That's when the blue line gets above the green line. Bearish cross is when the red line gets below the green line. And so we spiked that zone on the 30-minute candle. We've now retraced back to the zone. The question now is, will we continue in the direction of the slice? Or you'll notice that the step line on the way up, the black line, you had price, the step line, blue and climbing. But now the step line is crossing blue and climbing. When that happens, we'll typically get a retracement back to the BBC. If we just consolidate here along the weekly zone, 42-43 area, see this is now resistance because it's directly overhead, potential resistance. If we consolidate sideways for a few candles, then the BBC will rise to meet price, which is a different dynamic then price dropping to the BBC. On the Dow, same thing. We had a gap higher open that took us all the way up to the long target. The targets were published 5 minutes before the open, and so there was really no way to take advantage of that move because we opened way up here, and that quickly fell apart. Took us down to the BBC. We consolidated a few candles, but with this much red and falling behind it, it pushed us all the way down to and through the short target. Buyers came in here, rallied the market back up to the zone, where again we consolidate, and then we drop, hit the target again. Red and falling turns to blue and climbing, so we get above the BBC. We consolidate here, wide-ranging consolidation at the zone. Then we get a leg and a retracement, the pullback held. Now you got blue and climbing in the step line directly above price. So if price can overcome that obstacle, then your next potential resistance is right here, here, and then as you look further left, here, here, here. Okay, it's a literal minefield on the way up. And if we were to drop through the BBC, you got similar issues. Okay. On the Russell, we gapped right up to the long target. Again, these were published 5 minutes before the open. I guess I may have to start waiting till 5 minutes after. We'll see. So from there, we dropped to the zone, consolidated, hit the BBC with red and falling overhead, and what did it do? Took us right down to the weekly trading zone. Remember, once the zones are published Monday morning, they're carved in stone for the entire week. They don't change in any way whatsoever. So we consolidate until red and falling turns to blue and climbing. We get a leg, a retracement, a leg, a retracement, a leg, a retracement. And now we're trying to print another green candle. Okay. And the highest we got was 22.92. So we haven't hit that long target. We came within 2 points. But you only need 2 points in the Russell to get your goal for the day. So an example, this candle here opened at 22, we'll call it 81, and it ran up 9 points. There's 9 points in that one candle. It takes 2 points to get your goal for the day. On the NQ, we had a gap higher open, but we didn't hit the target. Came back to the BBC just like the other indices. Consolidated sideways with red and falling. That took us down to the target and all the way to the zone at 63/64. Buyers then came in. Red and falling turned to blue and climbing. You'll notice when there's red and falling, lower prices, blue and climbing, higher prices. A leg, a retracement, support times 2, then a leg all the way up to the target, and then the zone where we consolidated. The step line crossing blue and climbing, most likely we'll end up with a retracement back to the BBC. Crude oil, here's where we opened last night, and we dropped to the target, through the target. Well, once we trade through a target like that, the retracement back to that target, in this case, becomes resistance. And we get a leg down, resistance, right where the BBC is crossing that target. And then that pushes us all the way down to here. Okay, if you go look left, you'll find out why the market finds support there. Then the 9:30 opening bell on Wall Street. Crude took off like a rocket. Made it all the way up to the zone at 73.30/35. And then we get a retracement back to the zone. More consolidation. The step line is attempting to cross blue and climbing, so look for a drop back to the BBC. If the pullback holds, and it holds more often than not, if it holds, we'll look for another leg to the upside. If it doesn't hold, then there's a really nice big area down here where you can still get your goal for the day. These two candles are interesting. They both went from zone to zone. From 72.60 to 73.30. That's $700 per contract up and $700 per contract back down. Gold, we are now on the J contract, and we put in a new all-time historic high yesterday, and looks like we've put in a new high today. This was the open last night, below the BBC, right at the zone. We attempted higher. We got as far as this high right here, and then we drop back to the zone. Then we get below the zone, blue and climbing turns to red and falling. We're below the BBC, so we expect lower prices. We come down and touch the target, and we touch the zone, I guess, pretty much to the tick. Support sends the market looking for resistance. Resistance sends the market looking for support. And from here, we turn to blue and climbing, and we had a massive rally all the way up to the zone at 28.74. I guess that new all-time high, 28.77.1. So from here, if this resistance holds at the zone, there's still one more zone overhead up at 29.34. The step line has crossed blue and climbing. We're pressing up against the zone and blue and climbing. Blue and climbing got directly above price. We should see a retracement back to the BBC. Does it happen every time? No. More often than not, yes. Now if we get a pullback to the BBC, keep in mind that right here where the zone is, you've also got a bullish cross. Okay, so this would be support times 2 if price heads back this way. But at the moment it's looking pretty bullish, so it may just trade right through blue and climbing. If it continues much higher, then the step line will reverse and go back to the left side of blue and climbing. Silver. This is where we opened. Red and falling overhead. We dropped to the BBC and the zone, consolidated for hours, and then made our drop right to the target. Pretty much to the tip. Support sends us to resistance at red and falling, back to support at that previous low, back to resistance, back to support, back to resistance, back to support. Then you get the perfect stack on the way up, price, step line, blue and climbing, BBC. And we hit the zone 33.19/20 to the tick, which sent us back down, and you see how the top of that target became support, puts us back up, but now the step line has crossed. Got blue and climbing directly above price, the step line directly below, so price is trapped here for a moment. Resistance overhead, support below. Based on history, there's a greater probability of price coming back to the BBC than punching through blue and climbing. But it can happen, okay? You got to embrace all possibilities. Back to the daily chart. We're still sitting on top of the daily BBC. That's support. So this pullback yesterday, we ran all the way down to the 24% fib retracement, spiked it a little bit, but the candle was still touching, and we're still just sitting right on top of it with red and falling overhead. So I suspect by the end of the session we may see some lower prices. Michael's here. He's going to give us a recap of what happened in the live training room this morning, and then he'll do some live trading on the TradingView platform, and then I'll come back and wrap it all up with our good word for the day.
Yes. Once again, I got everything straightened out during the break.
Awesome. That's good news.
Yeah. I had to upgrade to use the latest version after downgrading to use the prior version.
Oh my goodness.
On OEC, and that was my problem today. But it's fixed. It's working. Everything looks wonderful.
Awesome.
So I'm ready to go.
All right. Looks good.
All right. Good afternoon, everyone. Today is Tuesday, the 4th day of February 2025. So if you have not taken a free trial with us and you want to, go here to mytradingiq.com. Go to mytradingiq.com and sign up for the free trial. Right there, it's going to be to this registration page where all we ask for is your name, your email, your phone number. There's 5 multiple choice questions. Please answer those honestly, because if you choose the wrong thing in here, you're not going to get an email. You're not going to get notified that you took the trial, because we won't get notified you took the trial. Down here, if you use NinjaTrader and you want to use charts on NinjaTrader, give us your machine ID. If you're not going to use charts on Ninja because we don't have the stuff that we're using in here on Ninja, if you're not going to use charts on Ninja, then we don't need the machine ID. Just give us your TradingView login ID. Okay? If you give us a TradingView login ID, we can enable your indicators. Your indicators will be indicating when you start. Now, this just updated for us. That's good. If you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Now, I told you yesterday that because yesterday was all in demo and because it was a mess, I was going to take yesterday off the totals, and I did. So we'll start February today on the 4th. We made today on the 4th, made 121 ticks on the NQ, 12 ticks on the Russell, and 18 ticks on the ES. Put us at just 890 this morning. So we started a little bit late. We had some trouble getting everything going this morning. I was working on a different computer. I was working on a backup and all that stuff. Excuses, whatever. We still got the goal for the day in the first trade. One trade, 1 minute, and we got the goal for the day. We're up $1,000 with 10 contracts on at that point. We ended the day plus $890 with 1 contract, so $8,900. And found the 24/20 blueprint so far this month. So far this year. If you added 1 contract per month after getting your goal for the day consecutively, up to $2,000 in profit, you would so far have $3,970 if you started the 24/20 blueprint and added 1 contract a month. You'd be at 2 contracts right now. All right. You'd be averaging $1,087 per hour following the 24/20 blueprint. Now, that is with the number of contracts that you're using in the 24/20 blueprint. You'd be at 2 contracts right now. All right. For the morning session right now, with 1 contract on, we're averaging $1,574 an hour. That's for the whole morning session. All right. That's not per hour. That's for the whole morning session. $1,574 for the morning session for 2 hours. Now, that is per contract. All right. That's with 1 contract. So let's go to what we actually did today. All right, now it should all be listed in here. And see, this is something I'm working on. It does not have any flat spots. But you see, sometimes it goes several bars before it actually goes into the overbought or oversold. It's because it avoids the flat spots. It'll stretch it out instead of giving you an overbought or oversold indication. Working on it. Be something someday, pretty soon, I hope. All right, I didn't take any trades in gold today. I didn't take a single trade in gold because I didn't have my gold dime up. I was working on another computer and I didn't want to mess things up by adding a gold dime at the end of the session. But I will trade gold now. Now I have everything running properly and I am on my normal computer, so I will be able to trade gold during this session. But I didn't take any. If we look at it, I actually changed the time frame this morning because on the 9 range this morning it wasn't looking so good, so I changed it to a 19 range on the gold. And the 19 range didn't give very many trades, but the ones it did give were nice trades. Let me get rid of that. Okay, the ones that it did give were nice trades. If you started right here at 9:30, the first trade was right here. You would have sold the open of this bar right there, which would have been a really nice trade. You would have bought the open of this bar, which would have given you some profit. It would have kept you in the trade, given you some profit several times. You would have sold the open of this bar, which would have given you a really nice trade. You would have bought the open of this bar right here. That would have, let me just get rid of these drawing objects. Those are on the 9 range. Move all those. You would have bought, the open of that bar, which would have been a really nice trade. You would have bought the open of this bar, a really nice trade. You would have sold the open of this bar. That one would have stopped you out. Eventually, it would have been a long way to get that stop out, but it would have been a stop out eventually. All right, if you sold it right here, it didn't go, it would have had to go 10 ticks into profit. From 19 range, it would have to go 10 ticks into profit to bump the stop. 64.2, it dropped down to 63.5, not enough. But you would have had a nice trade right there, and a nice trade right here. And just recently, this one right here, you would have been working on buying the open of this bar right here. So you'd be taking some profit on that right now. So I switched to the 19 range because the 9 range wasn't really giving anything really good. I'm gonna shut off the TV trades again. I'll just go back to straight. Yeah, this is where I got the goal for the day. On the very first trade, I didn't get a trade in until right here because I ended up starting late this morning because I had more technical issues. But hopefully, God willing, those are all behind me now. And I had to do an upgrade to the downgrade because we switched the back end. So our first trade right here was 20 ticks. There was another one right here that I missed, another one right here that I missed, one here that stopped me out. So I went from 20 to -5, and then I stopped out again, and I went to -30. And then I picked up 10 to get me to -20. Then I picked up 2 to get me to -18. And then I picked up, I think, 30 right there. Yeah, 30 to get me to +12 on that trade right there. The next trade was right here. The next trade that triggered, it was one right here during the break, a short right there. That would have been a break-even trade, and a short right here. That actually might have been much more than a break-even. It probably would have been a break-even for me if I trailed my stop. And a trade right here that would have been a really nice trade. A trade right now. I'll take that one right now on the Russell. Here it is. Okay, I just went long on the Russell. See how sweet this DOM looks. At the end of it all, I'm going to end up liking these DOMs better than the DT Pro DOMs, I'm sure. The stops are always in the right place with these DOMs, where the DT Pro DOMs, they were seldom in the right place. They're always in the right place with these DOMs. Once I figure out the trailing part of it, and I get to automatically trail to break even, that'll be great. And on this computer, I have the move stop to break even thing going here when I right click. And I also have right here, not that, that's not what I mean, not that. Which one is it? I don't know. There's a thing on there that does the keystrokes. I have the keystrokes enabled to automatically. I gotta go find my DOM now. I have the keystrokes enabled to automatically bump my stop. Let me go find that thing. Okay. Oops, that's the wrong DOM. Hey, I can't place trades on that. That's a DT Pro DOM. I'm so used to pulling those things up. Hang on. Let me pull up the other one. Here it is. Here it is. All right. So we're a little bit in profit on this right now. What I'm going to do is check the keystroke, because when we get to right there, I can do Control Z, and it did just bump my stop right to break even. I don't know if you noticed that. I'm going to lock in 10 ticks, and we're out with 10 ticks on that. Sweet. Okay. The next thing, that was a trade right here. Anyway, that was it for the Russell. So we just picked up 10 ticks on that trade. And that was it for the Russell today. Now the ES, we'll take a look at this. Let's shut that off. And the trades we took on the ES today. What was that? Oh, trading keyboard and shortcuts enabled. Okay, they moved it over. I see what it is now. They moved it over to the side. I'll show you. Here. This is what I was showing you a minute ago. They moved it over here to the side, way over here. See, trading keyboard and shortcuts enabled. That used to be down here at the bottom. But they moved it right over here. So when you do that, you turn that on when you have quick keys selected, and then like I just did with that, I hit Control Z and it moved my stop to break even. There's got to be something like that with CQG. I just haven't figured it out yet, and I don't know that I really want to. Nobody seems to really like CQG. Anyway, on the ES right now, we had a break even, then another break even, and then this trade right here, we picked up 8 ticks on that one. 8 ticks on that one, and then I don't know what happened, but we picked up 8 ticks on that one, and then something there and something there. What the heck was I doing this morning? I went from 8 to 7 to 6 to 10. That doesn't make any sense at all. Oh, is this even today? I think that was yesterday's. Yeah, this is today's. All right. So anyway, we picked up 8 ticks on the first trade, and then the way I have it went from 8 ticks, and it shows we went to 7, then to 6, then to 10, then to 24, then to 14, then to 18, then to 22, and then we stopped out, and then we went back to 18. So we ended with 18, but that's 1, 2, 3, 4, 5, 6 trades I show here, and 1, 2, 3, 4, 5, 6, 7, 8, 9 trades. So there's some trades in here that on this paper it says I lost a tick each. I went from 8 to 7 to 6, then I started to go up. So in here, for some reason, I lost 1 tick at a time a couple of times. It doesn't make any sense at all. But and we ended up, well, maybe this makes more sense. Okay, so we had some more trades over here. We had a stop out there. So I know we had the stop out where we went from 10 to 24, down to 14, then up to 18, then up to 22, then we stopped out again down to 12, and then we had 6 more ticks to get us back up to 18. So I did both stop outs in there for sure. But let's go all the way to the end and see what we have going on right now. Right now, there was just a trade from right here, the open of this bar. You see when the blue went into the oversold by itself, it was the open of that bar. Now, a minute ago, we had a short trade from right here, the open of that bar. So this is some nice chop that we're in right here. All right, this is a really nice chop we're in right here. So we had a couple of really nice trades. Each one of those would have been enough to get the goal for the day, which, remember, is all you really want to do every day. Just get in there, get the goal for the day, and wrap it up. And that was the ES. The NQ, we did trade the NQ today. Not too much, not like we normally do. But we started out, our very first trade on the NQ was a stop out. Let's put this off. Our very first trade on the NQ today was a stop out. We're minus 60 ticks on that guy right there. Then here we picked up 4 ticks to get us to minus 56. Then we had a 75 tick trade right there to get us to plus 19. Then we had another 75 tick trade right there to get us to 94. Then we went to 117, and then we went to 121. That was it on the NQ today. We, during the break, let's just get into the break here, right? Or even right now. Well, all right. Right now we don't have anything. We're waiting for the blue line to get into the overbought, the oversold by itself. Okay, it's got to get into the overbought or oversold by itself. You see down here we have the flat spot. This did not have a flat spot. There are no flat spots with this. It stretches it out when it's gonna, it senses where it's gonna have the flat spot and it stretches it out. So it doesn't print the flat spot for you. I gotta figure out exactly how to make that work to our advantage. But the flat spots is where you get stopped out. Okay, that's where you get stopped out. So you don't want to have the flat spot. You don't want to get the stop out. All right. The next thing, I guess, would be looking for this to get up into the overbought right here. All right, during the break, there was a short trade here, a long trade there, a long trade there, a short trade there, a short trade there, a long trade there, and that was it. A long trade right there. And that was it for the NQ today. All right. Now, I believe I have all my stuff functioning the way it should be functioning right now. Everything is looking good. I am happy with the outcome. 1760. You're beating your dad today, aren't you, Levi? You see what you got going on, Levi, that your dad doesn't have, is that you don't have any baggage. Your dad's been doing this for a long time, and he's got a lot of bad habits he needs to get out of. Or he's got a lot of habits. They're not all bad, but he's got a lot of habits that he needs to correct. That's what he's dealing with, just so you know. From a psychological aspect. There's a short here on the NQ, guys. Here it is. Okay, so I'll hit Control Z here to bring my stop to break even, or I can just right click and do move stop to break even. Those are the two ways to get the stop to break even on this NQ. Now, I'm pretty sure that I have the, yeah, I do. I have the 60 by 75 stop on here, 60 by 75 bracket on this. So we need 5 points on this. It's got to get down here to 95 for me to bump the stop to break even. Okay, let's get all the way down to 95. All right. And the gold's got a short here. Gold's hardly moving at all right now. I got to check the volume on the next contract. I think we just rolled the gold, didn't we? We just rolled to the J contract. Jill, are you in here? You or Dan? Okay, the gold, sorry. I'm going to bring the gold over and show you that one too. That's going on right now too. Here it is. The gold stop can go to break even. So I'm going to hit Control Z on that one. Watch the stop right here. Stop is up here. I'm going to hit Control Z. Bam, goes right down to break even. Okay, I'll lock in a couple of ticks. Now that should carry forward in the chart book that I created and I put out on the website for everybody to download. And over here, we need to get down to 95 to get the stop to break even here. Good. So you're getting some good entry points too then, Levi. What's your risk management like? How many stops are you getting? All right, Gordon managed to get into the group finally. All right, so we stopped out with a couple of ticks profit on the gold. Zero stop outs. What are you using for a stop?
I got a question in YouTube.
Okay.
Gold analysis, please.
Gold analysis. All right. Well, gold is on a 19 range right now. Okay, we'll start with that. And let's do always on top so I can monitor this trade. I'll blow gold up and we can look at it. Okay. So let's crunch it up a little bit. And crunch it up this way. Gold is meandering a lot today. It's not really choosing one direction or the other. It's at a point right now. It's coming off pretty close to the high of the day right there. The high of the day was up at 77.1, so it's coming off the high of the day right here. It doesn't seem to have any momentum going one way or the other. If you look at it on a much larger time frame, see, this is a 30-minute. This is the high right here, and this is a 30-minute. I would expect a retracement on the gold. This is actually a retracement right here. It's it's doing a retracement right now. This was a retracement of this leg up, and this is a retracement of that leg up. So you have a retracement within a retracement. And this is actually a retracement within that leg. So
That's an all-time historic high right at a weekly trading zone.
is it 77.1? Okay, well,
Yeah, the actual
it's losing.
zone is 2874/75.
Okay, so it's right
So
here.
it poked above
And
it
it's
just a little
bounced
bit.
off it a couple times here. So it's losing momentum is basically what I'm trying to say. You had, this is the way it's going. Let me draw it for you, and it might make more sense. Okay. It was going up in a big leg like that, and then it had a big leg down like that, and then it had a smaller leg up like that, and then it had a smaller leg down like that, and then it had a smaller leg up like that, and then it had a smaller leg down like that, and now it's got a smaller leg up that's just right there at the swing high. And now it's got the retracement is happening right here. So that's a weakening market right there. At the weekly trading zone, at everything else is the level right here, right here. It's showing weakness right there. Okay, it showed it pretty strong last time right over here. It showed it pretty bad over there too. That's what it looks like to me. That's my analysis. Now, if you crunch it up a little bit more, you see we have just about a double top going on right here, and it looks like it actually broke through the double top. My fear is that it would do another leg like this down right now, right down like that. Now, gold is showing some pretty good strength right here.
In both cases there, that was a new all-time historic high.
Right here and right over here. Yep. So it wouldn't surprise me if it drops. This is it's like an M, but an inverted W is what it is. And if it does drop, if it starts to drop and it gets below here, I would expect it to go all the way down to here. Right now it's just showing weakness. So, we take the small trades in there right now. I wouldn't look for the big trades right now. I would look for any small trades that you can get, is my analysis. That's what I think. Who asked that? This is about to stop us out. It's not quite there yet, but it's about to stop us out. This is the NQ trade.
That was asked by Trapstar. I think earlier when I went over the gold market, the step line was crossing blue and climbing, and we were looking for a retracement on the 30-minute chart back to the BBC.
Okay, and so if I draw that in here, let me put this back on this. And if I do that on the 30-minute, I'll do that right here. Okay, if I go here and I put this on and this guy right here. And I need to delete some of these things in here. Hey, the NQ's in money. No, it's not. It's almost stopped out. Hasn't stopped out yet. Sorry. Got me excited. It was below the green. That usually means you're in the money, but it's almost stopped out. That's the stop, not the entry point. All right, so let me come in here and delete a few of these things. Okay. All right. So this now looks like, if I get rid of the drawing objects, this looks like what Dwayne was looking at. The step line cross below blue and climbing right here. Okay.
And now
what
blue
that usually
climbing
means
is directly above price, and so that becomes now potential resistance.
Yes. The NQ trade is still going, guys.
In fact, price is trapped. Support at the step line, resistance at blue and climbing.
Right here, it's in a tough spot right here.
If we consolidate sideways for a bit, then that blue and climbing is going to turn to red and falling, and then we'll most surely get a retracement back to the BBC.
That's what I'm thinking. A retracement to the BBC hasn't occurred yet, with the black line crossing below the blue step, below the MA1 right there. We haven't gotten the retracement
just to the
yet.
left there, you can show where step line
over here.
crossed, and took it
right
back
here.
to the BBC.
It took it a while to get down there.
Yep.
But that's probably the same thing we're going through right here. It took it a while to get down there, and then it'll probably do a retracement down to this level. That would be a 50% retracement of here, right about this level right here. Be 50% retracement of this. It's already done a 50% retracement of this leg right here. That's already done the retracement right there. That's what I was talking about. I stopped out on the NQ. That's what I was talking about earlier. So it did this, did the retracement, then it did this, and it did a retracement, and then it did this, and it did a retracement. So it's got the retracement within the retracement within the retracement. So it's showing weakness right there. And it's got resistance there. It's an all-time high at resistance. it wouldn't surprise me to see it retrace some right here. I mean, it went up to the all-time high because of all the stuff that happened yesterday. And now all that stuff that happened yesterday, it's been put off for a month. So, the fundamental things, the fundamental reasons to make gold go up are no longer an issue right at the moment. And that it also went up because the crypto was crashing. Before we had crypto, when money came out of the equities, it went into the gold, it went into the metals. And in the past, in the past couple of years, it didn't always go back into the metals. When it came out of the equities, a lot of times it go into the crypto. But yesterday, it was coming out of the crypto and the equities and going into the metals, and that's why gold's at an all-time high. Because everybody was either going to cash or going to metal, and that's why the gold's at an all-time high, because the crypto was getting trashed yesterday, and the equities are getting trashed yesterday. And I imagine there's a bunch of automated stuff in the cryptos that that got triggered yesterday that made that thing start to tank as bad as it did. Those things start to tank as bad as they did. But the NQ trade that I had on here stopped out finally, guys. All right. Hopefully that answered the question. Oh, you don't have a single stop out yet. Okay. Well, how much are you risking on each trade, Levi? I'm bringing this back down to a 19 range on the gold. Okay. And take the price panel off. You don't know what I mean. Okay. When I put a trade on like this right here, this is how much money I'm willing to risk on that trade. Right. So if I were to enter up here and it goes below here, I'm going to get taken out of the trade. Right? If I enter there and it goes below there, I'm going to get taken out of the trade. I'm going to lose that much money, but I'm not going to lose any more than that. I know I'll lose that much, but I won't lose any more than that. So if you don't have one of these on and you get into this trade,
yeah, you'll never get stopped out if you don't have a stop.
Yeah, if you don't have a stop on, you'll never get stopped out.
You'll just end up with an empty account.
Well, as long as you're in a bullish market and you keep buying, then you'll keep making money. But if the market changes direction on you, then you can lose everything in your account and more. Remember, you're working on margin here. When you're trading this stuff, you're working on margin. And what that means, you probably don't understand that, but what it means is when you place an ES trade, you're placing a trade that represents a contract for the S&P 500 index. So what is it? What is the value of that right now? Doing at 6,057. What's the dollar amount that you're actually placing the trade on? It's like $250,000 or something like that.
Well, you take the current price and you multiply it times $50.
Yeah, so it's 300 and something grand.
For whatever your broker, let's say your broker charges you $700 to trade in margin, $700 margin to trade one contract. You're controlling over $250,000 of best of breed S&P 500 stock. $700.
For $700. Okay.
But you're not risking the whole 700 if you use a hard physical stop.
If you use a stop like we do, that's why you're killing it right now, because you don't have a stop on. You're just getting into the market, and the market just keeps going up eventually. And that's the way the markets are designed. But the indices anyway are designed to do that. When you're trading like the ES and you're trading the Dow and the Russell and the in the NQ, those markets are designed to go up, not down. This is a trade right here. You see this Russell trade that I just took. My stop is up here. All right, my stop is up here. But right now it's just gone 10 ticks in a profit. So I'm going to hit Control Z. Now I don't have any risk on the trade. Okay, so I'm not going to lose any money on this trade. And if it keeps going, then I'll just drag my stop down and lock in profit. That's what I'm doing right here. Okay, so I just locked in 2 ticks, which for 10 contracts, 2 ticks on the Russell is $400. That's what I just locked in right there. Okay, now if it keeps going down, that's great. I expect it's going to get down to here to 86.7. So I can put a target down there. My target is already set down here at 87.4. But I could move it down some to 86.7 because I think that that's where it's trying to get to, right? I think it's trying to get all the way down there, down to here. The swing low is what I think it's trying to get down to. And it probably will. If it doesn't go up and take me out right here, it probably will go down here to the swing low, or at least to the midpoint between here and here. 89.1. 89.1 is right here. Either way, it's a lot of money to be made. But that's what the markets are trying to do. And right here, it's in a little bit of chop, and this stuff that we're working with right now works great in chop. Normally we'd avoid the chop like the plague, but this stuff works great in chop. So, you know, I like it when it's choppy. And we have a ton of opportunity when it's choppy. Like right now, I'm going to lock in 3 more ticks, right? That's $500 locked in right there. 500, is that right? It's 20 bucks, 200 bucks a tick. So it's $1,000 right there. That's $1,000 locked in. It's 1,200, 1,400, 1,600, 1,800, 1,800 bucks locked in right there. Okay, so I expect it's going to go down here at least to the midpoint, right? Right down to about here to the midpoint. It might find some support there. And if it does, that's great. I got 1,800 bucks locked in. Okay, but I'm not risking anything anymore. Right? This is my entry point up here, and this is my stop. So now that's 2,000 bucks. Or if I were doing it with 1 contract instead of 10, it'd be $200 right there. Okay, if the yellow lands there, it's going to take me out. And I'll be out of the trade. But I'll have all that profit. See, so using the diamond principle, the way that you're using it, this is inverted right here. Okay, you'd be using it inverted right here, and it hasn't really completed the whole process because you would have started here and you just got to get down below this level. And once it does get down below that level, then you have your time element. But this is the price element that you're gonna need to make right here, the price element. That's why I was saying earlier, if you got all the way down here, first you know, the midpoint is there, then right there. But once it breaks through that, see, I just got taken out with 2,000 bucks. Once it breaks through this right here, then you would expect to get down to the next swing low right here. But that's, you know, in a microcosm right here, the diamond principle would look like this. Okay, it would look like this. This is your price element, right? From here to here is your price element. Now, you know, you think right now, we think that that's the price element. This could go up higher and change that. It could go up higher than this right here and change that. Now, projecting out from here to here gives us roughly this area right here for the time element. Okay, that would give us roughly that area for the time element. And so you would expect it's going to duplicate that and extend this out like that in this amount of time. So it would be down at this level here, roughly, in this amount of time. But before it does that, I mean, none of this actually means anything until it's got to complete the first portion of it, right? And the first portion of it is getting below this level right here, right? When you get below that level, you have your price element and your time element come together all at one time. Okay, let me blow it up a little bit for you so I can show you. Oops, I didn't mean to do that. Let me hit delete on that. So I can show you a little bit better. This is the first leg of the diamond. You know, if the diamond's got 4 sides to it, this is the first side. Okay, that's the first side, and you need 2 complete sides to really start the whole pattern. You need that side, and then that is where the top gets established, right? That's where the top isn't established really until this level down here, this level right here gets exceeded on the next side. So the next side down is going to go like this. Now, if it stops anywhere in here, like that, and then it ends up going higher, then this is your price element is up here. Now it changes because it didn't exceed the swing low. But if it does exceed the swing low, so if we go back here like this is the level. That's the origin. That's what it's got to exceed to establish what it's got to repeat. Okay, you don't know what it's got to repeat until it breaks down below that level. When it breaks down below that level, Then you have your time element is from here to here, and your price element is from here to here. Okay, so once it does that, it hasn't done that yet, but once it does do that, then you'll be able to say, okay, well, this is what I expect. I expect that in this amount of time, from here to here amount of time, it's going to go this far from this point right here, from that point. That's the idea behind it. So you can project it. You know, and I can do it with fibs pretty easy. If you do a fib retracement on this, it does a pretty good job of it. If I do from here to here, okay, from there to there. Now that's the first leg, okay? But if we do it the other way, let me do it the other way. And we'll say, let's say it does do the retracement. We'll say the retracement goes down to here, like this. Okay, it's not retracing the way that it normally does. This is a different account. If I was logged into the other account, it'd be easier to see. But you take this retracement, and you start it over here, where that was projected to be. Okay, and then you can see right here at this point in time, at this price, is where it should be, roughly, right there. So at 1:48 this afternoon, if it does go down here and break below there in this amount of time, if it does do all that, then at 1:48 this afternoon, price should be down here at 22.81. Okay, I know that was a lot of words, but anyway, I just wanted to show you. The Russell is on 19 range. Yeah, Russell 19.20, whatever. I did 20 because it's easier to do the math. But it doesn't matter. Part. Okay, and it's $50 a ticket. It's $200 a point is what I was doing, David. I think that's what I was doing. That's what I was trying to do.
In answer to your question, Levi, yeah, you should always use a physical hard stop loss.
Yes. But did I do the math all wrong in it, David?
If you use a stop loss, then that can result in you being stopped out. So, do you know what your largest drawdown was before you went into profit and took profit? Keep an eye on. So your biggest drawdown was 30 grand? Whoa.
30 grand, yeah, okay.
Oh, 3,000. Okay.
All right. Well, I run over my time, so I'm going to pass it back out to D. Okay.
All right, Levi, sounds like you're doing real well. Just, use a bracket order, and then you'll automatically have a stop loss and a target as soon as you enter the trade. So.
Yes. All right. So that is it. I'm going to wrap it up and pass it back out to you in fabulous Phoenix, Arizona, in Studio A, overlooking South Mountain, America's largest city park.
Alrighty. Recap of the morning session.
1 minute, one trade, $1,000 with 10 contracts on.
Good job.
Thank you.
And we looked at the gold earlier, and this is what it looks like on my chart. Pretty much same thing. Right there is the weekly zone, 74.75, and our high so far has been 77. But we're just consolidating sideways. The step line is crossed, balloon climbing directly above its resistance. So as we continue to consolidate sideways, the BBC will rise. So either price from here should retrace back to the BBC. Price always reverts to the mean. In our case, the mean is green. It's called the BBC. It just stands for bull bear cross. When price crosses above the green line, we're bullish, expecting higher prices. When price crosses below the green line, we're bearish and expect lower prices, higher prices. And price is kind of trapped right now because the step line is directly below price. That's potential support. Balloon climbing overhead, it's potential resistance. We could just go sideways into the close. You never know. See, each time we've put in a new all-time historic high, look what followed. Boom. And then new all-time historic high yesterday. Boom. That's typically what happens at new all-time historic highs. Because that's how the market moves across all time frames. It's like Russian nesting dolls. A leg and a retracement, a leg and a retracement. But see, a lot happens inside a 30-minute candle. If you're on a 5-minute chart, like this candle here, this 30-minute candle, it looks like, oh, it just went straight up. Well, if you drop down to a 5-minute or a 1-minute, you'll see that it didn't just go straight up. There was a leg and a retracement and 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 a leg and a retracement. Okay? Just remember Russian nesting dolls. Markets are fractal in nature. The BBC is fractal in nature as well. You can put it on a daily, weekly, monthly chart, 30-minute chart, 5-minute chart, tick chart, range chart, and it's going to work the same, but it's always relative to whatever time frame that you're using. In other words, if you're putting it on a 1-minute chart, don't expect daily results, and if you don't put it on a daily chart trying to get 1-minute or 5-minute type results. So anyway, we've covered all the markets, and we're kind of where we were. I think at the open of this broadcast, this red body was sitting right on top of the BBC, which we expect to be support. So it's moved up just a little bit, but again, we spiked it all the way down. Yesterday we opened here, dropped to the 24% Fib retracement, and then closed above the BBC. So this pullback held. And so far, this pullback is holding, but it's dependent upon how we close today. The fact that we got red and falling overhead, I suspect going into the close, we might see price move back down towards the low of the day. But only time will tell. Nobody knows what's going to happen next in the market. Not nobody, not know how, not no way, not nowhere. To become a member, it's pretty simple. Send an email to support@cfrn.net. In the subject line, put, I want to become a member. In the body of the email, put your phone number, put your name. We're not going to call you, but we are going to email you an informational packet that really explains what it means to become a passport holder and all the things you have at your disposal, all the tools, everything. And there's even a link you can click to actually become a member. The first thing is you get 2 hours of live training every trading day. 9 out of 10 traders fail because they don't have anyone to teach them how to trade. So we plug that hole with 2 hours of live training every trading day. Wherever you're at in your journey, imagine trying to get through it alone. Oh, or maybe you are trying to get through it alone. Trading can be a lonely business. It's nice to have a place to call home. On top of the group training, which is an interactive environment, every trading day, you have access to one-on-one private mentoring, the strategy you learn, the indicators you own as a passport holder, are fluid across all markets and all time frames. Future stocks, crypto, Forex, ETF, doesn't matter. Price flows the same across all markets and all time frames. From support to resistance, back to support, back to resistance, over and over. again and again. It's a never-ending cycle. That's why it's so important to learn how to read the chart. Because the chart, along with our humble set of indicators, it's not going to tell you what's going to happen next in the market, because that's impossible for any man or machine to know. But it will leap out at you what the next high probability move is. And over the last 18,900 plus individual Logic 247 alerts, we've learned that on average, 20% of the time or less, the market will do something other than the next high probability thing. There's a myriad of reasons for that, but I'm not going into it today. But there's just too many variables in price movement. Too many traders, too many positions. You know, some institutional trader who's trying to buy 200 E-mini contracts. You got to pee. So he pulls the order. Just go to the bathroom. But everybody else sees that huge order vanish from the DOM. And so they're like, oh my God, he must know something we don't. And so then everybody goes short. He comes back from the bathroom, goes long, takes his profit, etc. Okay? All right. As a passport holder, you get the Logic 247 alerts around the clock. You get the concierge trade alerts every evening the second they're published. Monday morning, 6:15 a.m. Eastern, you get the weekly trading zones. We publish the zones every week for our members since December 14th of 2009. Last month made 15 years. Once the zones are published Monday morning, they're carved in stone for the entire week. They don't change in any way whatsoever. And you're able to attend the members only workshop every Thursday night, 8 p.m. Eastern. Everything a trader needs, all under one roof, one low price. And you get the golden key that opens all the private channels in Telegram. So you're able to chat with our other traders, and to whom much is given, much is required. So we're always grateful to the members who become a part of that very close-knit community we have. Share their charts, share their thoughts, share their ideas. Most chat rooms you go to on the internet regarding trading of any kind, everybody's moaning and groaning, and probably for good reason. They've been lied to. It's a shame. Our discussion groups are very positive and upbeat, because whether a person's just started or been here a while, or they're incredibly successful or becoming successful, at least they know they're on a well-defined path that if they stay the course, okay, and by staying the course, I mean just show up, do the work, ask lots of questions, you can learn as well as anyone else. Again, everything a trader needs, all under one roof, one low price. Just send that email to support@cfrn.net. All right, good word for the day. Yesterday we talked about relationship problems. Now, today we're going to talk about bracing your children for the turbulent years. Now, I know that some of our members have children. Some have grandchildren. And we even have quite a few with great-grandchildren. So, wherever you're at in life, or maybe you're young and not married yet, this is still important. Psalm 139, verses 13 and 14 say, I am fearfully and wonderfully made. Your works are wonderful. In order for your child to thrive and have self-worth, they need to understand 4 things. Number 1, how God feels about them. The psalmist says, "Give thanks to the Lord, for he is good. His love endures forever." Psalm 136, verse 1. Knowing this is foundational to your child's spiritual development and to their relationship with God. Number 2, how you feel about them, whether you're the parent, the grandparent, the great-grandparent. So let them know that though you correct them, you will never reject them. Number 3, how they feel about themselves. The most painful aspect of growing up is related to the assault on self-esteem that's almost universal in today's teen society. Now, we can all look back on our own childhood and our high school days, and you were either the bully or you got bullied, or maybe you just kind of melted into the wallpaper and tried to stay out of everybody's way. But that's changed so much with social media today. Bullying on the playground we grew up with, well, there's still that, but on steroids is this bullying online thing. Young people typically feel like fools and failures before they have even had a chance to get started in life. So let them know they are a work in progress with incredible potential. Again, I am fearfully and wonderfully made. Your works are wonderful. Psalm 139:13. Help them discover their God-given gifts and help them develop them. Electronics, art, music, or even raising chickens for fun and profit. Anything. It's not so much what you teach your child. The key is that they are learning something with which to compensate when the whole world seems to be saying, "Who are you and what is your significance?" The teenager who has no answer to these questions is left unprotected at a very vulnerable time in life. So developing and honing skills with which to compensate may be one of the most valuable contributions that you as a parent can make. And number 4, how their peers feel about them. If they approve, that's good. But if they don't, and you have got the first 3 things right, your child will still thrive. And that's a good word for today. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.